Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the commodity space here, and we had a lot of action on Friday in response to the jobs numbers that came out, which were fairly in line, specifically compared to the last time where they were a big miss. But we had a very bullish response from the dollar, as you can see, big green candlestick. The most important resistance level that remains for me is still up at 97.77, and I will still consider anything under that a bit of a lower high. And if we condense the chart down to the 2-day time frame, we can see a little bit more clearly why that resistance level is important, because it's our last little bounce attempt and lower high, and anything under that keeps that in play and is still in a lower high pattern. So we have short-term support to be watching, the hourly uptrend, or this little support here at 96.59 before we saw that leg up. And if you are bullish gold or bullish the miners, you definitely don't want to see the dollar break 97.77. You want to see continued weakness, and you want to see the dollar break that 95.05, make that 95.03 monthly support. Because right now we are still in a monthly uptrend for the dollar, and it's going to be important here as we head into the rest of the summer as to which direction this pattern is going to break. The bears would love to see this as a left shoulder, a head, if we form a right shoulder and can't break resistance and then roll over and lose the monthly uptrend. That's best case scenario for gold and for those miners. And of course, if you are bullish the dollar, you want to see a bull break of 98.37 and continuation of this monthly uptrend. So checking in on gold in a tightening range now. And there was a nice play on Friday in the dump that was in response to the economic data. So we have our double top, we have our high, our low of consolidation, double top, and a higher low. And this is the support that we were playing off of on Friday. And the miners, the bull miners, the leveraged ETFs from their lows bounced over 10%. So that was the play for Friday. And it was a play based off of this gold support. So oftentimes, most of the time, I'm charting the levels on these miners themselves as to the most important levels for me. But in this instance, on Friday, it was all about gold for me. And I said to myself, okay, as long as gold holds 1381, I'm going to remain bullish, anticipating a daily higher low is going to form. And I'm going to make a play on these miners, which are so beat up in the short term, based off of that support. And you can see gold in the all-out dump in response to the jobs report had an hourly RSI down in the teens. When the hourly RSI is that extended and you're heading to a key support level, that makes a bottom fishing play a great opportunity where you make an entry based off of previous support, and that is your stop level essentially. So ended up entering NUGT in response to this weakness, and I already had an NUGT swing position, so I sold that day trading position a bit early, and we'll look at exactly what that trade was. Might as well do it now. So NUGT on that dump, we dumped down at 24.32. I believe I made my entry in the 24.60s, and that was an initial entry, and I would have entered one more if gold did kept fading down. And then I was exiting in the upper, let's see, I forget exactly where I exited. It was definitely too soon, but the reason I exited is it was me playing conservative, exiting the position I had just entered while maintaining my swing position, which I am still in here over the weekend. Another thing that I was watching for was a shift in momentum, and I was watching the 2-minute time frame on gold. So the weakness all morning on gold, we can easily say, once the bell rang, we have to see gold break this 2-minute momentum. Any 2-minute bounce is just giving us lower highs. The exponential resistance is still in play. And then we had this little equilibrium. We had our low, high of the bounce, higher low. We broke to a higher high, but only by 13, 14 cents. So it was still a double top. There's another higher low, and there's your real bull break with follow through. So that 2-minute time frame, getting that bull break, gave the bulls a lot more confidence holding. And where I stand right now, I'm still in my NUGT swing position, and I did get a good entry because my initial entry here was all the way back at, it was Monday, I believe. So I have an entry with my average in the 24s and we closed in the 26s. So that's keeping me comfortable. I'll be a lot more comfortable with that swing trade position if the bulls are able to break 27.60 early this coming week. And I will hold this position as long as gold holds the daily uptrend. If gold loses this daily uptrend, I will exit and start with a fresh clean slate to see if a weekly higher low can still form. So GDX is still in a tightening range, but we've got key resistance at 25.60 and 25.70. So bulls want to break that level early this coming week to be looking up at the recent high. And right now, the most important support level is 24.53. So again, you could be making your trade based off of this low and key support level on GDX or GDXJ, or you could use the low of gold. Either way, they will likely result in stops at the same time, but the bull miners a little bit stronger, and that is due to the market strength with the S&P 500 seeing a bull move at the end of the day and pretty much the second highest all-time close that we've ever seen on the S&P 500. GDXJ, very similar to GDX with where we currently stand. Support is 33.09 here. The bulls want to see a clear break of 35.02 and 35.09 to be looking back up at the recent high. Checking in on oil. So oil bulls saved from breaking down to lower lows. It looked like a bear flag, but we held support at 56, and we're continuing a bit of this bounce. So the next key resistance is going to be our top at 60.26, and we're watching the monthly equilibrium that's forming. This is the backbone of the trade that we have to keep a close eye on, and we've got our low of the dump, high of the bounce, higher low, and we're scouting the potential of a lower high compared to 66.58. And if this daily chart does drop down with a lower high and lower low, and if it breaks $56 support, then we are going to be looking at this monthly time frame setting our lower high. And 60.26 would be our lower high, and we'd look to fade back down to 50.59 and tighten things up. We can look at different time frames and see if you like clarity. This is the 2-week time frame, and there's more details here. But again, just watching to see, is our 2-week lower high being set? And we're going to look for a break of this tightening pattern sometime likely in August. And we're going to certainly be watching very close. So I don't really care much what the day-to-day is doing on oil. Correlations with the S&P 500 have broken a bit. It's not really as correlated as we've seen in the past. And those correlations always come and go, but worth keeping an eye on it to know when there's a strong correlation and when there's not. But the 2-week time frame is what I'm going to be watching on oil, and not going to be making any trades personally until we see a break of this range. And again, this is recognizing tightening ranges. Gold was in a tightening equilibrium for 2 years. Oil is now in a tightening equilibrium for multiple years, actually just coming up on 1 year now. But the bottom line is there's plenty of opportunity on the first few moves within an equilibrium, as there's wide ranges most of the time. But then once we get to a certain point, it gets tighter and tighter, and the trading opportunity gets choppier on shorter term time frames, and the follow through is less significant percentage wise. So again, that tells us pump the brakes, wait for the break of the equilibrium, wait for the volume spike that's going to come with that break, and that's when there's going to be significant opportunity again. That's when we want to be going aggressive. Natural gas changed the trend. So we are watching this 4-hour inverse, or I should say this daily inverse head and shoulders pattern, which the bulls did a good job of confirming. And this is the kind of trade that I scout and I watch and I look for what to anticipate for a week, and then I miss it. And I have no problem missing this trade. And the reason for it is the timing of when the break occurred. So first thing, let's see, it was Friday, and the break was occurring pre-market. So the break had already occurred pre-market. The first resistance level was 381. Make that 2381 that had to break. And that broke before the bell rang at 9:30. I personally am not going to be trading a leveraged ETF for natural gas before the bell rings. Those who did and got in, congratulations, nice follow through. But it's the kind of thing where I see the break happening pre-market. I look at the hourly RSI. It's already well over 80. And I say, there's no chance I'm entering that with that hourly RSI that high. It's just not ideal conditions, and I missed the trade, and I'm perfectly fine with that. I'm not going to chase it. I'm just going to go look for another trade, and there's always another trade. If you're comfortable trading any market, gold, oil, natural gas, stocks, marijuana stocks, cryptocurrency, if you have this plethora of choices, it's very easy to push FOMO aside. Even though I've been watching this trade for 2 weeks, I can just say, well, no biggie, I'm going to go trade cryptocurrency over the weekend or whatever. So I think having a broad scope of what you can trade really helps with chasing decisions. But as far as we have natural gas right now, we know the weekly time frame is very likely to form a lower high compared to 2688. That's another reason I'm not going to chase here. If I really wanted to get into natural gas, pretty much we're going to look for the same inverse head and shoulders pattern with our left shoulder, our head, wherever this move tops out. If we cannot break 2688, it's just going to be a right shoulder and a lower high, and then we have to form the higher low and change the trend. Pretty much the exact same thing that happened has to happen. It happened on the daily, and it has to happen now on the weekly time frame for a prolonged bounce. The weekly exponential resistance, which rejected the last bounce attempt, we were right at that level as well. Another reason I didn't enter. So bottom line is, if you as a bull got in, congrats, nice gains. But if you didn't get in and you're wondering, is this a move I should chase? For me personally, it's not. So what's that? Higher low support, 223.2. Anything above that keeps the daily uptrend intact. As long as the daily uptrend is intact, our weekly top has not been set. When we lose the daily uptrend, we will say our weekly lower high has been set, and we'll look for that potential right shoulder on the weekly time frame. Also keeping an eye on these exponential moving averages, the 12 and 26 period here, they have not crossed bullish convincingly since the $4 range. That was forever ago. That was in December 2018. So that was, 7 months ago. And we're looking for the potential of the first clear cross, but we had a very close cross that didn't get any follow through, and we'll see if that changes this time around. Again, weekly time frame, got to keep the bigger perspective intact here, which is a clear lower high pattern on the long-term trend still intact. I appreciate you watching. Hope you had a good weekend. We'll check in throughout the week. See you then.
Yeah.
4. So we got our wood chips delivered. We also got a pile of manure delivered. And this is our progress so far. Stripping away a path. We're going to put the wood chips in the path, and as we peel up the grass, we're putting it on top of the grass to create the raised bed. And we've been getting muck from the pond, because the pond's pretty much 20 years of all these cypress leaves deteriorating. So we've been swimming in the pond, and it's about a foot of muck. So we're taking some of that muck and putting it on the raised beds as well. So far it's sod flipped over on itself, some muck, we put some weeds that we've pulled up in there, and we're gonna add manure, and we'll take it from there. This is gonna be the one row of raised beds. We're gonna get the wood delivered in a few days, and it's some second tier cut from a local sawmill. So we'll piece that together, and then we'll do another path to the left of it, and then another row of raised beds. And thinking of putting some blueberries in this mulch bed already established, and we'll see how it progresses. Blackberries are starting to ripen, and there's a huge difference between a blackberry that's hot from the sun and something that's days old and refrigerated and out of the grocery store, and it's way better. And these guys are big and fat. And it's important not to take every ripe berry. You want to leave some for the birds to have, because sharing is caring. Baby ducks are getting their sleek feathers now. The fuzzies are going away on their wings and continuing to get older. I'm gonna come in to say hello.